Ooh, fun one.
So, yeah, so this is really cool because Chris Hager, his prediction and his article is 7.3 billion. Just from the rate, the trend that it's going now, that's going to be really exciting if we have $7 billion in direct deposit. But that's just a linear trend. I feel like it might be a little higher just because of all this APY talk. I know Tanner, you probably don't think that's going to contribute to the members, but direct deposit for sure. SoFi Plus, literally, they've created this whole. They spend a lot of time creating this SoFi Plus membership product to incentivize people to start adding their direct deposit. So they spend a lot of time on that because I feel like it's really important. But this is going to be a really fun to see on the Q4.
Yeah, but I think what SoFi dominates, where a lot of people don't quite understand in the finance space, is a direct deposit client. It is a premium plus client. Imagine a client on SoFi that is paying monthly, 10 times the revenue for a direct deposit client versus a traditional client that just maybe wants to use SoFi money or invest occasionally, like a MIT, for example. That type of client, a direct deposit client, we're expecting, massive numbers for this. Or I shouldn't say we are. I am expecting massive numbers there. In Q2 of 2022, they saw 37% of their members that joined in the first month of joining SoFi Money actually converted over to a direct deposit user. In Q3, the most recent quarter, it was 50%. I have a feeling that this quarter in Q4, it's going to be even higher. And that means not only are we converting people like at a ridiculous rate, but even faster going forward. So that is such a recipe for success that no one is giving, nearly enough credit for, considering we're trading at, price to book right now. Nothing?
Yeah, that's a good point.
What would be the bear case on deposits if it's not 7.3 billion? What would be like a bad level of deposits?
We're too new. How do you know, right?
There's literally no way. There's no way that we don't get seven. I feel like 7 point, or I don't know, anything above what we're. There's no way that we're not going to be having just an insane amount of deposit growth. There's every catalyst is pointing in that direction. And it's only a good case. So what is it? Chris said for every $100 that we get in direct deposit, SoFi makes like $1.30. I'll correct that in just a moment, but that might not seem like a lot, but when we're talking about billions of dollars, that's going to be a hell of a lot of money coming in. So they're $1.25 to $1.50 for every $100 in deposits. That's how much money SoFi makes, and it's going to add up pretty quickly.
So
I think the first year we're actually is this quarter going to close out the first year of us actually having deposits? Because the bank charter, we got it in January, so this is Q4.
Yeah, so technically, I mean, 4 quarters, but not technically, because there was 21 days or 22 days there where we didn't have it in January, so it won't be a full.
It wasn't a light switch. They had to switch a bunch of accounts from SoFi Money over to.
Yeah, my point is just we don't have a lot of data points. We have 3 other data points.
Yeah,
very little. But I think Chris, he's got to go to Florida in the morning or something like that. What he said, but I'll give some pushback on that because I disagree. And what he's doing, or I assume what he's doing at least, is he's taking the difference between our warehouse facilities and our, cost to actually fund the deposits. And then he's keeping that, which is what we get to take, right? Is the difference in costs. And then that is what we get to keep. And so I assume that's what he's doing. Per $100, $1.3 for every $100 of deposits. Makes sense. The problem is what happens whenever our deposits fund our actual personal loans, and that will happen. That'll happen extremely quickly, and at that point, we still can make money off deposits if we do it properly, but it's not going to be nearly as profitable as the difference between warehouse facilities and deposit costs. So just because I'm talking at a little bit of a high level here, so I just want to make sure that everyone understands what I'm talking about. Warehouse facilities are like a big corporate credit card for these banks, where they're able to go out and fund their loans based off other debt providers. Okay. And then if no one will give them that debt at rates that they seem deemable, then they can actually go to the Federal Reserve as a last resort lender. But that probably will never happen for us. Anyway, so then what we actually do is we take deposits instead from clients because we're a bank now, and we offer people 3.75% or 2.5% as a checking account. But because we're offering such high rates, it's because our warehouse facilities are probably along the lines of 4.5% or 4.25% or something along these lines, where that extra 0.75 or 0.5% margin there is what we used to have to pay before we were a bank. Now we don't. But once the deposits get past the amount of personal loan originations, then we still have to pay these people 3.75% or 2.5%. We can't not pay them. Oh, sorry, we have no more loans to give out. Like, that's not how it works. So we still have to give them the rate, but then we have to look for fixed income products to actually lend out at a higher rate. And right now, that might be feasible. But as time goes on, if Fed lowers the rates and these sorts of things, that will no longer be feasible. This is why, Amit, last week you said, what's going to happen to SOFI's checking and savings accounts going forward? They will have to lower it because it'll become a big liability. Deposits on a bank are looked at as a nice thing, but they're actually a liability to the bank. They're a big cost, because we have to offer these people an APY. So, yeah, anyway, that's my piece.
Brian,
Right.
I think you had something.
I don't. That's if Tanner wants to show it in a minute. So Tanner, you look at it because I don't really know what it means. It's in your DMs, but
Okay.
Yeah, I mean that's a good point. I think there's a good argument for. I think a lot of the stuff we talked about, either getting to 500 or not getting to 500, getting to 7.3 direct deposits or not. I mean, hopefully we get close to both of those numbers. I tend to agree with Tanner on the 500K. I would love to see that happen, but I also don't think that's.
I think it is. There's so many catalysts. I think y'all are wrong.
Well, it'll be fun
because we also have like another additional million users that are probably going to be using the referral codes. Like, I mean, this stuff has to compound. Word of mouth and referral codes. Like, don't y'all think that we have to start making more?
Why would you say that from every quarter that's happened since we've gotten 500,000 members?
Because we just had a low float. Like we have 4 million members, but like once we have 10 million members, how like do you still think
we don't have 10 million? You're changing.
I know, but like at some point we have to our guidance of members, it has to go up
on an absolute basis, not on a percentage basis. On an absolute basis, every subsequent quarter makes it that much easier for us to hit a 500,000 number.
Exactly. Okay.
Yeah. I agree. But for now, I think we're going to save on costs. And
so sorry, just to finish that thought, if it's not 500,000 members this quarter, it better be 500,000 members in Q1 because we'll be over 5 million at that point.
I don't know where these arbitrary numbers come up. Like, it better be like Q1.
Assuming we maintain the same growth rate sequentially quarter over quarter, percentage basis.
Yeah, but why would you assume that? It's been going down every quarter.
Not by much.
No, but not by much. It's not stagnant. So assuming we're going on a downtrend and of a growth rate, right? So just in case everyone's listening, we're not making sufficient amount of members. We are gaining exactly how Anthony Noto wants us to.
So I guess Tanner, the argument is basically: do you think Q3 was an outlier, or do you think Q3 was the start of a trend, of a downtrend?
What about Q2?
Q2 was on Q2 was on target. It was like 11 or 12% quarter over quarter.
Yeah, but it wasn't 500,000 where previously we have hit 500,000. So why did we hit 500,000 that one quarter, but then previous quarters after that it was less? Technically, it should be easier. But what I really think it is just back whenever we hit 500,000 members, this was not the same market. We are in a tightening market, and it's going to not be about growth, just like Zachary Perret said, the Plaid CEO, it's going to be about not growth, but survivability, profitability. Why would they want 500,000 members right now if they could take that amount of new money instead of trying to hit this arbitrary number that means nothing to Anthony Noto and actually, try to put that down and beat on earnings per share, which is a number that, Wall Street wants to see way more than member growth. Having a bunch of zeros behind your number and having one tick up does not change the stock at all. Like,
fair point.
You know,
It is a fair point, but I don't think that 500,000 number is something that Noto is shooting for either. I just think it's going to happen naturally.